The following is a presentation of TFNN.
Good afternoon, folks. Welcome to the August 29th edition of our Mastering Probability Celestial Charting webcast. And, if you got some questions, feel free to go ahead and type those in as I'm going through the presentation today. We've got a small group. If you are listening in on the recorded, the archive webcast, feel free, as always, to send me an email, steve@tfnn.com. We'll go ahead and we will gather again 2 weeks from today, so Wednesday, September 12th. And we do these things every other Wednesday at 3 p.m. The areas that I wanted to be able to cover today, I wanted to look at the current lunar astro cycles that we're just recently had, that we're looking at on our horizon. I wanted to look at the general market action today, some of our current trades. Mostly wanted to focus on the IBD 50 here. The reason being is just simply looking at at least at this stage, had been looking for the market to move down into the full moon. It does not look like that is what is going to occur. Of course, it is only Wednesday, but the market is really in that tight trading range, and doesn't look like we will have any kind of true feel for what the market wants to do until Friday. I believe that the minutes to Bernanke's speech will be released at about 5 minutes to 10 Eastern Standard Time, and then his actual speech will come on at about 10 o'clock. But we're going to focus on the IBD 50. I've gone through each of the stocks. I included in today's newsletter, and I'll go ahead and punch that up here on the screen here for a moment. So in today's newsletter, what I had placed in there at the bottom was, if you had clicked on either of these two links here, what that did was it brought you to a page that, a PDF that you could print out. I'll go ahead and pull that up here as well. And what that did was, that was at least the beginning of my analysis on the IBD 50 stocks here. And as opposed to try to put this inside the newsletter, because the newsletter, this would have been another 50 pages when it was all set, 51 pages when it was all said and done, 51, maybe 52 pages when it's all said and done. So what I've done here is the ranking on the IBD 50 here is just simply coming from the most recent edition over the weekend, so on Sunday, and then the symbol, the name, and what I've identified here is possible entry points. This column here, don't use these, at least at this moment, as the actual entry points. I want to go back through and refine it, because what I was doing was going through the IBD 50, each of them, to see if there was a pattern that made sense for us to play, perhaps some momentum play as well. And also to weed out the stocks where it didn't make sense. It did not look like it was a good risk-reward trade for us. So all the work here is really set up, and this will be updated. I will eventually have comments on each of the charts in here, and I'll try to make this just simply a part of the standard newsletter, where there will be a link for you to be able to access, these charts or anything else that I might put in there from a longer-term standpoint for your review. And where I'll probably place that in the newsletter is I'll probably place it somewhere down here on page 5. I have made some changes to the newsletter since we last were together, putting all of the information with regard to any active trades or information that need to be taken, any type of action that need to be taken, really right up front in the first couple of pages here, and any new trades or that we might be looking at before I go ahead and get into the market overview and all of the other information contained in the newsletter. So those are the changes there, and then obviously any Q and A that we might have. So if we go take a look at the most recent lunar phase that we had was last Thursday, August 23rd. Came in at 1925, so it was really 425. I don't know why that doesn't make sense to me. I think it was 225, but 425, perhaps 425. And if we take a look at that, I've got that marked on my chart. For those of you that either have access to or trade the ES Mini, as I've pointed out in several workshops that we've done, utilizing, you want to make sure that you've got perigee identified on your chart here, because you do want to take a look at that area acting as support and resistance, and being long when price is above and short when price is below. Now, inside the newsletter, in the upper, and I just want to go ahead and cover that here. I'm going to pull that back up. So inside the newsletter, I just want to make sure. Inside the newsletter, up at the upper section here, I've got a market posture for the S&P 500. Again, this is for the S&P 500. I've got long-term, intermediate term, and short-term. And so, a very good question came up. Steve, if you're short-term bullish inside the S&P 500, why are we looking at short trades? Why do we have short trades and so forth? And what I want you to understand is that the indicators that I'm using more than just one indicator to identify whether the market is in a bullish or bearish mode. That way it helps you for any other trades that you might be in that, are not related to the newsletter. What I'm trying to do is pick a trend change. In this case here, in taking a look at the new moon that came in, that didn't, we are now short in the Dow Diamonds. And so I'm really trying to identify a trend change as opposed to utilizing a number of different aspects. So what I mean by that is I'm switched over here to what goes into that decision, whether it's bullish or bearish. And so on the shorter term, so I've broken this down between monthly, weekly, and daily. And so on the daily chart, what is one of the key things is trying to catch that summation index when it turns down. I didn't have that in this morning's newsletter. I put it in yesterday's, and it was still pointing down last night, so I didn't feel I needed to put the chart back in there. And so that is what I'm really looking at is the decisions are mostly right now, they're based on utilizing some type of leading indicator, whether it's a lunar phase or a candle pattern, whereas what's going into much of the decisions here are using some lagging indicators like 9-day and 18-day exponential moving averages on the daily chart, 50 and 200 on the weekly chart. And so I just wanted to make sure that I was able to clarify that for folks out there. Now, in the case of Perigee, for those of you that are intraday traders, you may not be trading the futures, but if you can still plot this on your chart, and as we took a look at last Thursday, I believe Thursday or Thursday when it came in. Yeah, it came in on Thursday. But when we took a look at Friday here, it gave us the candle formation that we needed from an intraday standpoint in order to be able to take a long position. Now, this was a snapshot that was taken maybe about an hour ago, so you can see that we're really trading sideways, continue to trade sideways. So I see a question here. Let me just read this question. Steve, do you still like the XLE to trade down to 68 and very long based on Jackson Hole? Okay, so as far as Dave's question, probably should have just read it out loud, but I think everybody was reading it. So, with regard to our current trade, let's go take a look at the XLE out here. And the answer, well, I'll pull up the wrong thing here. I think give me a second to get the charts here. So let's go take a look at the XLE first and see what the XLE is doing as soon as I can find the tab. I think I have too many tabs at times. There we go, spiders. Okay, so we're going to take a look at the XLE first because that's what you're going to be basing your decision off of, Dave. So we'll put the chart all the way up here on the screen. And when we're taking a look at the XLE, what's in play here, which is nice, is that 0.786 Gartley. And on a 0.786 Gartley, what you should expect is you should be seeing a pullback if this pattern works, at least to the 0.382 level, so that'd be 68.61. But more likely 65.89 level out here. And the way to potentially play this, now I'll suggest this to each of you. We have some positions that are in a profit situation, some that are in a losing situation right now, and there is just simply no way for me to know, or you to know which way this market wants to trade coming into Jackson Hole. Now it's a full moon that we have coming into Monday, and for whatever reason, full moons typically are something that we would want to buy. If we go back and take a look at all the other full moons out there, even as the market was moving up, buying a full moon had been the right decision to make. However, during the course of maybe the last 5 or 6 months, buying or selling either of the lunar phases as the market was either moving up or down, it was the proper decision. And what I was doing for a bit of time before, as I was preparing for today, and I just didn't have enough time at the end, was to try to go back and identify the last time that we had the market coming into basically the same price point of where we would have a full moon and a new moon out there. And I wasn't able to identify that. So I'll go back through the charts this evening and try to identify that. But here's the deal. If you've got profit in a position, then if you want to play the most conservative approach, is just simply go ahead and go to cash, take your profits, and then if the market does move in our direction, then you can jump back into the trade. So that's the most conservative approach. The pattern that we're seeing out here still holds up, and you can take a look at the news out here. I think the bottom line with regard to the way that the market is trading, nobody in the market really knows what to do, because if QE3 or liquidity was a given, I can't see any reason why the market would just simply stay here. Now, with the exception, if you just simply take a look at, so if we just simply go from a technical perspective, the technical perspective says the following, and that is, I'm going to just simply put up the weekly chart of the S&P 500 or the ES Mini, and you can see that on the weekly chart here, what you're up against from a trader's standpoint, when you take a look at what the market is telling us, and we're taking a look at candle configurations, you can see that we are up against some very strong resistance. That very strong resistance being the bearish engulfing candle from the week of April 6th, 2012. That was after the market had made the high the month before in March, and you had confirmation on that following candle as the market moved back up. What did we get here? You got another bearish engulfing candle with the market moving down. So you can see this area here that the market is trading in, has a strong supply line. It's where the market wants to sell. And that is why the way that I think the market can be played, and certainly the way that we'll be doing this in the newsletters, we're going to stay with our short position. If the market's coming in, near the highs, then it's the time from a lunar standpoint to sell the market. We won't add to our short positions, but we simply would stay short. And then I've also done all of the other homework for us to go ahead and take a look at some of the better trades that would exist out there, and some of those I'm just simply going back to some of the momentum stocks in the IBD 50, because if this area here breaks, then from my standpoint, assuming that it breaks with conviction, then outside of the indexes, the trade to take is to go long, because this thing has been up against a very strong resistance area, and just simply playing the momentum play at that stage would be the thing to do. When it comes to the ES Mini, however, it doesn't, right up here at the 1441 level, and you're at 1410 right now, so it's not like it's that much higher, runs into a whole other set of resistance with regard to bearish candles that are out there. But I think that what we would see is more likely is that the market would be able to churn through this area. You're already inside that candle. If you take a look at it right now, I think the market would be able to churn through that area, and it would start heading up towards the upper part of the trend line. There is, as I included over the weekend, there is the 4-year presidential cycle, but if you dig down further into it, there's the presidential cycle when you take a look at whether you have a Democrat or Republican in office, and the day that the market should have been putting in a low, I believe that was August 21st or 23rd, I can't remember off the top of my head, and I put that in there. So, there's that pattern there that suggests the possibility of being long. But first, the market has to prove itself, and it's got to get through this area right here. So I hope that answers your question, Dave. And so let's go back here to the presentation. If we take a look at what is so here's the parity. Make sure that you have that marked on your charts here. If we take a look at what is coming up on Friday, it's not just a full moon; it's a blue moon, and the blue moon is really referring to there's an extra moon that occurs just simply because of the you got 365 days a year, And in the last 7 times in a 19-year cycle, there's an extra full moon in there. Normally you should have 12, but just because of the days, every now and then you end up with a extra moon, and that's what's referred to as a blue moon. Now, in this case here, what's interesting about the full moon that comes in, it lies right in between, exactly right in between perigee and apogee. I did go back and take a look at all of the other blue moons out there to see if they had any other significance from a high or a low or marking a turn, and they didn't. So just a piece of information. If we take a look at the lunar phases, on the SPY chart out here, the market, and again, this was a snapshot taken, just maybe about an hour ago, and so it's that new moon cycle, hasn't moved down much. Inside the newsletter, on the SPYs, I did go back for you to take a look at the harmonic numbers, the harmonic retracements. And so as we took a look at the current retracement, this one here happened to be one of which I think was 29 points. There were three or four different levels that were out there of retracements, and I identified those for you. And that first level had already been hit with the retracement as the market moved down into this date right here. I think that was the 24th out there. The next, so we've got the full moon coming in on Friday, and then after that, the following week, we've got the following Friday would be apogee. That would be at 56 past the hour, midnight Eastern Standard Time. And that's what you would go ahead and mark on your chart. This is ephemeris time, so just back it off by 5 hours in order to get to Eastern Standard Time. And then after that, the following week would be the next new moon cycle out there on September 16th. In September, there is also one planetary index date, one P index date, and that is on September 24th, Monday, September 24th. Out there. As far as remaining aspects, I was not able to do any research. I didn't do any charts for you on the major aspects that are occurring here tomorrow and on Friday. I'll get a chance to do that I'll get a chance to do that. If I see anything, I'll include it in the newsletter so that you folks can review that. So let's go take a look at the market here for a moment. Then I want to go take a look at the IBD 50 stocks that I went through for that listing. And so if we just simply come over to the ETFs out here, what we can take a look at is if I just simply start off with what has been the strength out there, now happens to have been the Qs, and the Qs having been the strength, you can see, for another day, because it's already 3:15, and the volume on this is 17 million shares, and that 17 million shares really going into, these two resistance areas out here, this bearish engulfing and this evening star. So you've got 44 million or you've got 45 million, and it continues to be tested on lighter volume, and that is where you normally would be taking a short position. It's giving you, so there's no reason technically to change my mind about the positions that we're in, and if the market responds positively to whatever Mr. Bernanke has to say, then we'll know that, and we see some momentum behind that trade. We'll already have planned for that, so we'll have a plan going both sides. If the market has moved up into Friday, even though we've identified the IBD 50 stocks that we're going to take a look at, we won't go long any of those stocks until we see the market pull back and try to identify where that would go. If I switch over and I take a look at the market, and I go right now to the ES Mini and take a look at just simply the 30-minute contract, what you're seeing out here is a sideways trading range, and the sideways trading range really between candles that are out here, between candle confirmations. You've got right here, you've got a bullish engulfing candle right in here. Here's an area of support. You got a little bit higher close. You can see here's another bullish engulfing candle that came in. This one's a rather large one. So you can see how the lows here, where my arrow, my cursor is going across, is acted as a support area. Just as if we take a look at resistance lines, you've got a large shooting star most recently. That's this candle right here. So you've got that out there. You've got even today, you can see as the market gets up into this shooting star area, immediately turns back. So just simply in this consolidation range out here, not being able to give us any information with regard to how to trade. I know that it's frustrating, but the market is doing what the market is doing. If we go over to the ETFs real quickly here, and then we'll go over to the IBD 50 stocks, what we can also see is what has been moving here this morning today has been the small caps. So the small caps are trading up, into the resistance area. Not any volume here behind the move, but when we saw yesterday, when we saw this close here into the candle, into the swing point candle, even though it was on lighter volume, it just suggests that it may want to go test the high. If we just simply take a look at what the retracement has been so far in there, you can see it's gotten up towards the 0.618, almost to the 0.786. So it's really also a natural and normal retracement out there. The SPYs are just simply testing their resistance area, doing it also on light volume. There's 53 million shares today. It is trading inside the swing point here from August 21st. If it closes inside that, it sets up the test, the possibility of the test of this area, possibly even the test of the August 21st high there. And then just to close this out, the diamond, so we can take a look at that, and then we'll go switch over to the IBD stocks and the work that I did there. The diamonds here showing, that they have absolutely been the weak link out here, and that was the reason when we came into the last new moon cycle. That was why we went short the diamonds. So the diamonds here, would need to get going in order for the market to move higher. We obviously wanted to get going to the downside, but not really providing us a whole lot of information today, because really just kind of inside trading. The information's given us no buyers or sellers at this stage. Now let's go over to the IBD list. I'm going to first pull up the spreadsheet, just in case for any of you that didn't click on the link that was contained inside the newsletter this morning. And I'll update that today or tomorrow. But what I've done is I've gone through each of the IBD 50 stocks out here. And again, the rank here is coming from the Sunday newspaper from August 27th. I think that was Monday, from the Monday IBD out here. And when I've identified here, I've either identified a possible entry point. Again, I want to go back and I'll study that, and something will come off of here to an actual trade. So a trade alert with regard to what to take. But of course, the information is done here, and you can also utilize this obviously for your own decisions if you want to. Maybe you're in a stock, or you want to go ahead and use this for whatever other trading. Now, when I've identified, if I put the word pass up here, it's just simply because there's a pattern that maybe has completed, or perhaps there's a bearish engulfing candle, like in this case here, bearish engulfing candle on SolarWinds. We'll go take a look at that stock chart and take a look at the thought process behind not taking it. And what I've also done in all of this detail here, it's the Word document that I'm using to create the newsletter isn't wide enough to allow me to put in all the details. The information I included 2 days ago included more information than just this here. So what I'll do is for the spreadsheet, which you'll be able to get a link to, hopefully you'll be able to have a link to it and pull up this information. We'll have more than just 15 or 20 characters here. But what I've also done is, if I've identified a trade that makes sense, I've identified what the pattern is and the reasons why. That's really what helps us with the exit points, which will be some area of an A to B equals CD pattern that's out there. And then the last thing that I identified here was the risk-reward. So I've gone and calculated, and the risk-reward is the assumption that we would enter at the entry price, that this is the stop that was used, this is the exit that we finally make, the risk that's taken. Now, in many cases here, you'll see where the risk needs to be less than 1%. Now, the reason why why I would be using less than 1% is because if I used 1%, in some cases it might take up 10, 20, might take up 20, 30, or 40% of your total working capital. So we utilize the position size calculator, and the 1% is the general rule. For those of you that have used the position size calculator, you'll see from time to time, and if you choose a stock as an example, you'll see you've put in all the information, and a message will come up on the screen, and it will say to you, it's an alert that says, your position size may be too high because you're using 40% of your working capital. So on any individual stock, I don't like to have more than approximately, and this is the guideline, approximately any more than 10% of any one stock of the total capital of the trading account. So that being the case, that really gives you a couple of options. One option would be to widen the stop. In this case here, for these stops, I'm using 1.618 times the average true range, and not that you can't expand it, but you certainly can as an option. Or the other easier option is just simply reduce the risk that you're taking in on the trade. So that's when you see something other than 1% in here. I've basically left the stop at the 1.618 multiplication factor of the average true range, and all that I've done is gone and I've just simply adjusted the risk in order to be able to give you the proper number of shares out there. All that being said, then, in order to be able to go through this to make it even easier for you to look at, and this is what will end up. This may be what appears inside the newsletter for the IBD 50 as I do this and maintain this for us, is just simply all those stocks in the IBD 50 that makes sense. Now, at this stage here, the rank that I've got here does not tie out to this rank up here. This is the actual 1 through 50 of the IBD 50. What I have down here is I've taken any equity where there was a positive, that was a trade where there was a positive, obviously only a positive risk reward, and I've just simply summarized those down here and prioritized those based on the best risk to reward ratio as the place to start. And just so out of the IBD 50, there's 18, and today there's probably one that we would remove from this just based on the way that it traded, and that was the fresh market, as I was putting that up on the screen. And so that way here, this makes it summarized, and so any of you that are in some of these trades, you'll also see some patterns that are out there where you might want to be taking a look at possible target areas. So I hope all that makes sense to you. That's the work and the logic and everything behind that. And as always, if you've got some suggestions, please send them off to me. Because this is, after all, your newsletter, and trying to provide you with all the information possible. I know that the newsletter is very long, but it covers we have several hundred newsletter subscribers. Some folks are trading options with the newsletter, some are trading the future, some are trading currency, and many other things. So that's why I'm just simply trying to cover the overall markets. Even we've got folks overseas that are trading some of the international markets. So let's go take a look at the IBD 50. And what I'm going to do is just really let's just start with the number one reward to a risk that popped up out there, which was IT, which is the symbol, which is Gartner Group. Oh, that's too bad. I don't know why only these stocks came up here. But okay, so we're going to take a look. I'm going to pull this one up here on the screen. And as we take a look at this, I was looking at daily, weekly, monthly charts out here. So we take a look at the stock here as I pull this back. Let me just refresh this, make sure I do have all the data now. You've clearly now when I take a look at the stock and going all the way back to its IPO back in 1993 out here, a positive that you see about this stock is, pretty much everybody is at the party. Everybody in this stock, even if they bought it, back and they sat through a downdraft from 1996 when it was trading at about $35, as it got all the way down to $6, they still held on to it. Those folks are still in a profit position. And this is a live chart, that we're looking at here right now. But there is clearly an A to B equals CD up on this. That A point coming all the way down here on March 31st, 2009, when it was down at $8.33. So the B point on this right up here as it comes into April 29th. Now, if you can see this little red line that's going across, that's the actual volume. So I'm always identifying the volume of the swing point, especially when you're taking a look at an A to B equals CD, because you want to understand whether or not you've got a confirmed A to B equals CD. Now, obviously, this is quite a large leg. Now, not only is it quite a large leg, when you really take a look at the retracement on this, so if we go from the low up to the high out here, what you'll see is the retracement is even less than a 0.382 retracement. So what it also suggests to us on the weekly chart here is that this has the potential to do more than even a 1-to-1 A to B equals CD. But if we take a look at first this equity here, as it first gets through the B point, and we take a look at this week right here, you can see it closes above it. That's the week of May 4th, 2012, and it does it with volume. And therefore, you now have a confirmed A to B equals CD on this. When it gets back above it, it came back down here. I don't know what the reason was or what the logic, what the news release or what have you was on this equity. But you can see as it got back above it again, it did it with volume out there. And so as I pull this back or I squeeze this down here a little bit more for you to take a look at, you can see that 6710 is the 6710 is the exit price. Now on the newsletter piece that I showed you earlier came out to 6707. As I shrink these things up and down, it's going to change the cents by a couple pennies here and there. But you can see just simply a 1-to-1 A to B equals CD on this chart here would make sense. Everybody is so it's a confirmed A to B equals CD. If the market really is going to rally between now and wherever, if the market does take off and gets past those resistance areas, when you take a look at even entering right now at $49.91, the entry price I had on the spreadsheet was $49.67. You're looking at a possible 15 to 1 reward to risk ratio, and that was also only risking 25%. But again, at 0.25%, but that 0.25% still is allocating probably about 10% of your total working capital. So then it's a matter of coming down on these charts here and taking a look at, excuse me, didn't mean to do that, coming down and taking a look at on the daily chart and just simply trying to find an entry price on this, or giving it a wider stop. So when you have a reward to risk on this, there is the possibility that we may come in early and just simply utilize 0.5% instead of 0.25%, and just widen the risk a little bit early. Because if you're going to just simply take a look at this chart and try to identify a spot to possibly buy it, the one thing that sticks out that would be a concern would be this high volume bar back here from May 31st. But this stock here comes up as being the number one on the list. If we take a look at number 2 on the list here, it's coming up. Number 2 from a reward to risk is Watson Pharmaceuticals, and the ticker symbol there is WPI. So let's go ahead and we'll pull this up here. And if we take a look again at the A to B, so here's another stock, okay, and everybody in this stock is in the money. So it's over any kind of resistance out here. And again, if we take a look at A to B equals CD, and let me see, I don't know if I have this one. Give me 1 second here. It may have been the monthly chart. No. So let's go ahead. I'll put this back on I'll leave this on the monthly chart out here for us right now. So here I'm just simply going to do the A to B equals CD on this because it didn't follow through from the other spreadsheet. So our A point is going to be down at the November 30th 08 low. Our B point is going to be right up here at September 30th, 2011. You can see the retracement on this. And what's nice about now, this stock here has got this high volume bar that hasn't been tested, hasn't been pulled back over it. I'm just going to do this on the monthly. We'll come back and do it on the weekly here. But if we take a look at on the monthly, now does this have volume on the monthly as it passes the B point? Well, here's the B point, closes above it, and the answer is yes. So on the monthly, we have a confirmed A to B equals CD. On the weekly, we have a confirmed A to B equals CD. And you can see the price projection on this is 107.98. I've got 108.24 on my list. That must have been what it came up with on the weekly chart out there. And so now it's a matter, and that gives you a 15 to 1 reward to risk ratio on this. And so if we take a look at the weekly chart out here, no real bearish candles, nothing of significance, obviously, right now this week. This is pulling back. So let's go take a look at this stock here. So it gapped up, and so the entry point on this, because it's trading inside this candle, is really going to be a test of this window here, this gap, this most recent gap. So the buy on this would really be down at the $80.60 level. That's assuming that it comes back to this area here and tests it. What you can also see that it did on the daily chart here is it completed the approximately completed the 1-to-1 A to B equals CD. So it makes sense that it's pulling back. It's nice that it's pulling back on light volume. And it's possible that the time to actually enter this stock might be right up here at $81, where you've got this little high volume bar out here from July 26. But this looks like a good setup. If you do take a look at the history of this stock here, when it gaps up, all that we really have are two gaps that we can take a look at. This gap down here or up here from April 26th. When it did gap up, the stock did go ahead and move back, and it went ahead and filled that gap. This one right out here, it did not fill, so that is still a gap that is open, and has not really been tested. And then it's got this gap right here. But this is a stock. Even if you were to take the trade, do it on your own, and you were to get stopped out, this one here requires about a 1/3, 0.33% risk, and so. We may not, on some of these stocks here, we may not that have confirmed A to B equals CDs. Unless the market gives us a total long-term change in direction, which at this stage it hasn't done. Even if we get stopped out, this would be an equity where I would take a look at either widening the stop as it moved back, or getting stopped out and trying to come back in for another entry point on it. And that's the other nice thing when you are trading something, and the risk that you've taken is 1/4% or a half or a third. And you have reasons to be in the trade, but maybe you just simply got in early. Then I take a look at widening the stop as just simply being a trading decision because you've got more information than when you first went ahead and placed that trade. And when you can stay in that 1% or less risk, that's the optimum way to be able to give you that type of leverage to do that. Likewise, as the trade starts moving in your direction, you can go ahead and add to the position, from a momentum play. So that was on Watson Pharmaceuticals. That shows up as number 2 on the longer term chart as what to take. If we go take a look at the next one that pops up, number 3 is Edwards Life Sciences. And then when I'm going to do Edward Life Sciences, I'm going to go back to that spreadsheet and we'll take a look at a couple of them that didn't make the cut, and take a look at the reasons why, so you understand what's behind the charts out here. So when we take a look at Edwards Life Sciences, let me just refresh the screen, make sure that I've got all of the historical data. So now you can see an area here where it does nothing but really build cause, moving sideways, moving up and sideways, but certainly moving sideways. So this is an ideal type of A to B equals CD up structure here. Your A point, I'm just simply using the swing point low, December 19, 2008, out at $24.17. Makes a nice run up here. If we take a look at the retracement that this thing made, makes about a 0.382 retracement. And so, again, when I've given you some of the exits on these and we take a look at them, many of these have only done a 0.382 retracement on the weekly chart. And what that really says, folks, is that it has better than a 50% chance of moving up more than a 1-to-1 A to B equals CD. And so, I am trying to find some longer-term investments and trades for us and for the newsletter as well. So when we take a look at Edwards Life Sciences here, and the B point happens to be right here, March 4, 2011, does 3.7 million shares. Here's where it comes through that B point. The week of June 15th does it with 9.5 million shares. So that's got conviction in it. And that conviction on Edwards Life Sciences says the A to B 1-to-1 projection on this takes you to $131. The 1-to-1.272, $150. So it is that is number 3. It is a nice trade. It is a confirmed A to B equals CD. On the weekly charts out here, there's no bearish, nothing significantly bearish to be worried about. And now it's just a matter of trying to find an entry point. This is one of those trades that only requires a 0.25% risk. This one actually had I would say right here, this high volume bar going back to June 14th is an area that gets tested, and that area is holding. So this, quite frankly, is in the buy zone. So right here, now suggesting that we add this to our trade here, but this is one that probably won't get away from us. Depending on what if the market responds positively to to whatever it is that Bernanke may or may not say. And when I mean positively, I mean break through the support area with conviction, the resistance area with conviction. This is an equity that probably won't get away from us. Has come back and tested a recent high volume bar out there, and is one that we could just pull the trigger at. Even if it's traded at $103. So I hope that makes sense to you. Now what I'm going to do is I'm going to switch over and let's take a look at something that did make the cut here. So if you give me a moment here, I need to go find that spreadsheet. Okay, so let's take a look at what did make the cut. So Solar Winds, SWI, that's number 2. So let me see if I switch over here, if that comes up on the screen. So here's all the 50 of them. So let me see if quickly I find Solar Winds out here where the work was done. It's probably right in front of you. Probably one of you see it, and you're saying, Steve, you just went right over it. Solar Winds, SWI, SNI. Okay. Yeah, I figured that would happen. I don't see it. Okay, so let me just pull it up here on the screen. So SWI is the ticker symbol. That is number 2 in the IBD 50, and it has already completed a weekly A to B equals CD. I'm going to change this over to the weekly chart. There we go. So it completes a 1 to 2.618 A to B equals CD, and it made a bearish engulfing candle. Now, bearish engulfing candle for the week here, if you get a higher close this week, then to me has less relevance. It's still a bearish engulfing candle, but it has less relevance, and therefore, we'd come back and take a look at this equity. But it looks to me like this has some more work to do and test to the downside. Thanks, Glenn, lower right-hand corner. I didn't see that. So that was on Solar Winds, and so it's completed a pattern and it's given you the bearish candle, and that would be the reason why I would not be in this trade here. And it's really the weekly chart that showed that to us. Another one to take a look at, we'll take a look at Melanix, MLNX, I'll just get my eyes, see if they can find it here. Obviously with 50 on here. Melanix. Oh, I see. There we go. Okay, Melanix, I got it. Okay, so Melanix here, if I take a look at Melanix, this thing is just simply, and I put down as the explanation the reason not to take it, it's just simply parabolic. I mean, when you take a look at this move, there is no A to B equals CD here. I have no way to give you any type of chart pattern, as far as how to play this. Now, now everybody in this stock is absolutely, in the money, or most everybody inside this stock is in the money. And the only way to play this type of stock, or the easiest way to play this type of stock, would be to find a bearish candle that's acted as a resistance level. And then when I mean a resistance level, I mean that it's actually tested and it's held as resistance and then finally breaks through. And then if it breaks through, then what you could do is you could play a momentum trade. But if we take a look at the daily candles out here on Melanix, the only bearish candle that was out here was this bearish engulfing right here. And you had this bearish engulfing come up, and you see in the actual resistance of that level would have been the prior session, would have been the August 10th high, which was 113.90. And you can see that the very first time that it was tested, you got to close above it. So this didn't act as to me, that wasn't a momentum trade, because you got to close above it and it didn't hold. What you want to be able to see, in my opinion, what you want to be able to see in a momentum trade is an area that acted as resistance, was tested, at least a couple of times. 3 tests would be best, but at least a couple of times, and then the market breaks through. When the market breaks through a resistance area, then you've got some room to go, and you can play the momentum trade. And it's really how it is that we're setting up the possible trades for coming into Friday, or anytime. Anytime that the that the S&P or the Dow, the Qs, any time that they would take out this resistance area that the market is bouncing up against because it's been tested, enough time, says it's time to go ahead and take a momentum trade. Now, when we took a look at the ES Mini, you're talking about your next area of resistance is going to be 1441. So, but that's how I would play this. This is the reason that Melnex, which is number 4 on there, did not get the cut. Apple, the reason Apple is number 5, and in Apple's case, and I'll put that chart up here on the screen, that hasn't made the cut, and that's just simply because of the still the 1.272 butterfly sell pattern that is out here. And what we want to watch for Apple, because it will give us a signal, is what it's created out here is still an island. And what I mean by an island, folks, is this. If you take a look at this high right here, August 24th, you take a look at the day prior to the gap up, you can see that the high out here is 669.48. And so far, the low that's been established has been 670.67. Until if Apple were to gap down, with Apple being one of the leaders out there, let's say that again tomorrow, all that the markets really do is just trade sideways. There's not any reason to think that the markets won't do tomorrow what they've done today. What they're going to do yesterday. You're going to see the market up 35, down 35, up 35, down 35. And so that says to me that Apple will likely trade inside this range here. And now the one reason why this might not turn out to be a island reversal would be because Bernanke's comments don't come out till 10 o'clock. So unless somebody knows something ahead of time. But here's really the point. Apple has a history of making island reversal candles, and it doesn't matter whether it's Apple or it's anything out there. They're the most, in my opinion, they're probably the most important candle formation to be able to identify either island tops or island bottoms. So so this is a sell pattern on the daily chart. And if it gets above the 680 area, then this thing will go ahead and run up to a higher price. And it would be the 1.618 area, which is, in case you just want to know what it is, would get you up into the $720 level, $719. So that's on those. So that is on the IBD 50 stocks. So tomorrow, in tomorrow's newsletter, there will be a just like there was in today. You'll have the entire listing here. You'll have my entire spreadsheet, and it'll be both spreadsheets. Let me put this up here. It'll be the upper portion, so it'll have all the IBD 50 stocks, the ones that I've said to pass on, and it will have all of the different charts that are in there. And it will also have this bottom one here, so that these are areas where you can go back and you can take a look at them. Just because Michael Kors only has a 3-to-1 reward to risk doesn't mean that it's a bad stock chart. Just making the cut here meant that it had a good enough reward to risk. Francisco Holdings may not at this stage, just simply because it's less than 3-to-1, but I'll still include it out there. And so are there any questions that you folks have? And it's 10 minutes to, and I was going to go ahead and cut this one just a little bit early because I believe that I'm doing the show with Tom today, or at least the first hour with Tom, and I've got a little bit of prep work to get that done. So I hope all this helps you, but I will take a question or two if you've got them. Just go ahead and type it in. And then, as always, feel free to send me an email or feel free to call me in the office. Most of you have my cell phone, and always feel free to use that. So, right now, you got the market is selling off just a bit. Looks like it'll probably be just slightly flat out there. And okay, so we'll go ahead and end it. And everybody have a great afternoon, and I'll look forward to seeing you or speaking to you again sometime soon. Take care. Bye-bye now.